I'm Charlotte McLeod with investingnews.com, and here today with me is John Feneck, portfolio manager and consultant at Feneck Consulting. Thank you so much for joining me. Great to have you.
Likewise, Charlotte. Nice to see you again.
Really good to be catching up. And of course, our last conversation was at PDAC right at the beginning of March when this rise in the gold price was just beginning. So, of course, I think we should start by checking in on gold and what's been happening over the last couple of months, and perhaps where now you see upside and downside for the metal.
Sure. Well, if I remember correctly, the downgrade on Newmont was February 26th, and I mentioned on your interview the following week that that was insane, given how much money Newmont would be making at higher gold prices. And if you caught Newmont's earnings last week, whoever that analyst is not feeling very good about their decision to downgrade Newmont. Newmont is the largest holding in GDX. GDX is about a $15 billion ETF. And Newmont is one of the poster children, if you will, for large gold stocks, right? So, we thought they had a good quarter in January. They had a good quarter in April. We're off to the races in gold producers, in terms of doing well at the earnings level. And that gets the attention of big money. And that's what's needed. We've said this on your show probably for 3 years now. That's what's needed to generate more interest in the space, because we get that question all the time. It's good earnings. You have to have good earnings to attract the big money in the institutional world. And now we're seeing that, but we're seeing that while Newmont has a big yield, BTG has a big yield. There's other stocks that have decent yields alongside of beating earnings, and that's very attractive to large cap value managers or mid cap value managers out there. So I think the sector is going to get a lot of new flow this year, and you can see that already. That Agnico Eagle AEM is leading the sector there. So getting back to the gold price, we were a bit surprised by how quickly things took off. As you know, I'm very measured about gold, and we've been talking about it on your show now for quite some time. But we said at the last PDAC that 1800 would hold in 2023. We were correct. This time around, we were saying there's a higher floor on gold, which means that it won't go down as much to the $1,800 level. That 1900 was really a floor for all of last, about 5 months of last year, with no days closing under 1900, which is amazing. And then we had brief spurts where it would go above 2000 and fail around 2075, 2100, come back down, retest. But this time we broke through with authority in March of 2024, and we went all the way north of 2400. Now, as we're sitting here around whatever 2285, it doesn't matter. If we lost a few percent from the top, you can still see these companies printing money. You want to see gold at a nice level for a sustained period of time. That will help these companies generate a lot of free cash flow and beat earnings and beat on rev, which is what Wall Street wants to see for a sector rotation to occur. So very bullish on gold. That has led us to buy more gold stocks. We probably have about 40% of our portfolio in gold equities right now, which is a little bit higher than usual. I picked up some Dakota gold since we met last, which is symbol DC. DC is in South Dakota. The chairman is Bob Quartermain, who's been in the mining business for many, many years. And Jonathan Aud, the CEO, and I had a first conversation April 24th, and it's on my YouTube channel, Feneck Commodities Report. Don Durrett and I actually interviewed him jointly. And, excuse me, Jonathan was saying that they were going to come out with their mineral resource estimate, MRE, on Richmond Hill sometime in the coming weeks, which has now been released. They show that they have over 2 million ounces of gold, and they want to consolidate the entire district, right? So when you look at a stock trading at $2.45 with a New York Stock Exchange listing that hit $3 regularly a couple of weeks ago, we think it's going back to 3+. And so as value managers, we look at that and say the market's just missing this one. What else do we like? Well, I met Frank Callahan for the first time at the conference I was just at 2 days ago. He has been in the mining business, 20, 25 years at least. And he's been out of the business, retired for about the last 10, he told me. And he came out of retirement to kind of get the band back together. And, with his same exact team that he delivered value to the market back, a decade ago. He's now back in Canada drilling a new project called Golden Cariboo. And one of the things we look for, Charlotte, is people that have had success in mining previously. And geez, if they have the same team in place that generated that alpha for investors, that's really positive. So with very few exceptions, he has that same team in place drilling in Canada right now. The symbol is GCCFF in the States. And it doesn't trade with a lot of volume right now because it's a newer, entity. But I think they're going to produce some really good drill results because Frank seemed very excited about the prospects he's seeing there. So I would keep an eye on that one too.
Okay. Really interesting to go through what's been going on in gold and the new opportunities that you're seeing there. So thanks for going into that. I think I've got a number of pathways to follow down here. So in terms of gold, I think during that last conversation we were talking about the Fed as we usually do. And you were telling us that the meeting that was going to happen end of April, early May, the one that we just had, was going to be really key. So of course that recently wrapped up and we had the Fed hold rates steady, and Powell said, okay, before we do anything, we're still looking to see more evidence that inflation is really moving down. So I want to check in with you on that and see what your thoughts are on when we may actually get those cuts.
Yeah. So when we interviewed at the beginning of the year, January 1st to VRIC, let's say, many market participants were calling for 4 rate cuts. And that quickly changed as we started to get more economic data in February and March. And when we sat down the first week of March, I thought May 1st would be more important than it actually was because we kind of knew through March and April that May 1st would be kind of a no decision by the Fed in terms of raising or cutting, meaning they just did nothing. But the verbiage this time around wasn't really inflammatory in either direction, in my opinion. I mean, I'd say one of the biggest changes was Powell is sort of putting all his chips on the table here and saying, I don't see any stagflation whatsoever, which a lot of people in the mining space obviously disagree with. And that will be interesting to see how that plays out. I think we're right and he's wrong. But let's see how that plays out over the next 6 to 12 months. Answering your question about how we see cuts, I looked at the Fed watch tool this morning. It was showing June 12th with about a 15% probability of a cut. So that's probably off the table at this point, which brings us to July 31st. And July 31st is looking about a 35% chance of our first rate cut. So that's still on the table. But if we don't get July 31st, that brings us all the way to September. And that one is going to be really important because obviously the broad market, not just our sector, is expecting cuts and has been elevated, in my opinion, because we're expecting cuts, right? So if we don't get a cut in September, I could see a September, October for the broad market that looks pretty bad in certain names, because it's going to be just, a disappointment.
Okay. Good to get your thoughts on what's happening there. Always interesting to hear. And one thing I want to bring up is, I think at the end of last year into this year, I was hearing a lot of like, okay, the gold price is really going to move when the Fed starts cutting. And clearly it started to move without that happening. So for you, we talk about the Fed is so important for gold. Are there other things right now that are more important for us to pay attention to?
Well, what's interesting is that we've had this explosive move in gold without World War three or any type of Fed cuts, right? Like these are some of the catalysts that people have been talking about is, a bigger Middle Eastern conflict, something happening like a black swan event. None of this has happened and gold has still done what's done. So I think that's really bullish for anyone involved in gold or gold equities because I don't think a broader conflict is off the table by any means. We've sort of just seen some type of respite in the headlines for a week or so, but that doesn't mean things are hunky dory in the overseas world and how it relates to us. At least in this country with America, fighting wars quietly through other means, right? I mean, if you look at the aid package we just put together, $95 billion, I think it was. I mean, not another small number that was passed here in the States to support Ukraine and Israel in their, fight. So I think that we're just muddling along with those type of conflicts, and they're only going to. I mean, I think the Middle East is going to get worse. I mean, just from the stuff that I read, and I read a lot of different things to try to educate myself. It just doesn't look like this is going to resolve itself. I mean, both sides are really digging in. So I think that could be a potential catalyst for gold, Charlotte, because gold and silver, unfortunately, love fear. And we have very little fear right now in the markets. We're seeing, protests at UCLA and different schools, but that's not going to drive, gold. What's going to drive gold and silver is actual, stuff like we saw with Syria, Iraq, different players getting involved, and you're like, whoa, I didn't realize this was going to get this, broad this quickly. Um, so I still think that that's on the table. I think gold has proven that it's a safe haven asset, and you're starting to see more smart money be attracted to that, meaning that you had a rally in the broad market that started March of '09. I mean, we are 15 plus years into this, and I don't understand how we're there, but we're there. And I think some people are just taking a breather from buying tech, buying the S&P, and saying, "Hey, let's get in some asset classes like commodities that are completely trashed and make some money here." Right? And we call that a sector rotation, away from things that are traditionally in vogue and moving towards more conservative things like our sector.
Okay, and one more broader question before we move on to talking about some other metals. And just because you had brought up stagflation, say, here in the mining industry, yeah, everybody's talking about that. And they've been talking about it for quite a long time, but just over the last couple of weeks or so, I've seen that popping up in kind of more mainstream ways. So are you in that stagflation camp, I guess is the question.
Well, we went on your show last May, I guess it was, and we said that we were kind of dialing back our recession call because I saw tech and AI just taking off. I mean, you can't really get behind a recession call when you're seeing the kind of extreme moves we saw in a sector that's so dominant in the market, right? So I'm not really banging the table on the dollar crashing, on stagflation necessarily right away. Down the road, absolutely. But the dollar has actually remained really strong. And I think I mentioned that on your show as well. It's like we're not one of those gold and silver, entities that says you have to have a crashing dollar to have good prices in gold and silver. And look, I mean, the prices speak for themselves. Rick Rule has taught me that, like, gosh, 7, 8 years ago. He said there are times when the dollar will run alongside of precious metal prices. And we're seeing that. It doesn't happen often, but what that's telling you, I think, is that the dollar, gold, and silver are all being viewed as more of a safe haven trade. Let's look at the price action we saw today, for example. Non-farm payrolls come out, they missed pretty badly. Broad market loves that, right? Because that might indicate that rate cuts are coming sooner than later. Interestingly, gold was flat, like right on, like almost to like no activity, but was up and down a ton today, but it finished flat. GDX finished about flat as well. So is that a real bullish sign for our sector? No, I mean, we would love to have a good day after something like that, but it's our sector is now acting differently. It's zigging when the market's zagging. That's exactly the kind of price action you want to see as an investor in this space, because our sector is now reacting differently to news. In other words, we're not just following the S&P and the Nasdaq up, which is really positive. We call that decoupling.
Okay, really good to go into that as well. And I think I have one last question on gold, more specifically on the gold stocks. So you mentioned, I think since the beginning of this year, we've seen GDX and GDXJ on the move, but it doesn't seem quite yet like we're into that kind of FOMO moment that we've talked about in previous interviews when people see gold go away and they really pile in there. So when do you think that might start to happen?
Well, I will say that we called for that 2550 to 26 level on GDX to hold, which it did multiple times, and then it just took off, right? And we said once it got above 30, it would be really good. It has gotten above 30 now, and we're around, I think, 3350 as we record this, maybe a little lower. We tested that 35 level, which is sort of major resistance, and it failed. It did pop for a couple days above there, but it didn't hang out there very long at all. So 35 to me is sort of that big number in the sand that you've got to get through with some closes and some confidence, some volume. But nonetheless, I mean, it's been a really good year depending on what you're in. I mean, we own GDX and J as core holdings in our portfolio. It's about 12% of all of our holdings. But we have a lot of different satellites around those type of core holdings to generate alpha in our portfolio, which is outperformance, right? And names like trying to think here, like, well, I'll just give you one. So Platinex is now called PTX Metals. We mentioned it once on your show before. It's right around the same price. It's trading very, very low versus the peer group. It's 0.024 cents, right? So 2.5 cents, let's round up. On the chart, it can get to 3.5 to 4 cents very easily. It got there on heavy volume over the last few months, right? So buying it here, let's say it even goes to 5 cents, which is not outrageous at all. You're making 100% gain, right? Like the difference would be that Newmont would have to go from 40 to 80 to get 100%, right? Like that's going to take a while. And so we tell people, yeah, we love Newmont. We're going to hold it as a core holding, but this could double, in the course of a year. And that's what we want to see as portfolio managers. We want to see that, kind of outperformance alongside of our core holdings that are more conservative.
Okay, okay. I think we'll move over to silver now. And this is an interesting one because I think last time we talked about silver, probably many times in the past, you had mentioned that $25, $26 level is really key for silver. It would need to get through. And of course, since the last conversation, we've seen that happen. And like gold, silver has pulled back again since going above there. But I'm curious to what you make of silver's performance. So is this seems to be a positive step forward, I would think.
Absolutely. We said all of last year that 26 was not going to get broken, and many of our peers were at the 30 to 35 camp, and we never saw it never saw it break 26 with any authority on the second half of the year on a closing basis at all. I mean, it was just really heavy resistance. Since we last met in March, it broke through 26 like butter. I mean, it was like immediate break to the upside, which is really bullish activity. And then we saw it go above 29 briefly, and now it's consolidated back, right? So let's say it's around 26.15, 26.20 right now. Not wonderful. I would have loved to see it hold in there a little bit better than this, but will it hold that 25 to 26 range again? Because remember, that was resistance all of last year, and now it might act as support. And that, from a technical perspective, is really bullish. So I'm in the camp that it will, 25 will hold. We'll see. I mean, a couple of spikes below 25, who cares? If you remember, silver, spiked below 18 for like 2 days about a year and a half ago, and it doesn't matter. I mean, even though 18 was support, if you have a couple of days below that or above resistance, it really doesn't matter in the big picture. The positive takeaway is that silver was able to hold 21, 22, 23, make a run at 25 to 26, break through it, and almost get all the way to major resistance, which is 30.
Okay. And of course, I should ask you if you had any updates on silver companies that you're watching at the moment.
I think we mentioned Guanajuato Silver on our last one, GSVRF, and I just had dinner with James 2 nights ago at the conference. Spent about 2 hours together, and I mean, again, 4 producing properties. This isn't a silver explorer. This is a silver producer, right? So they produced about 1 million ounces last quarter, which was a nice little bump from the previous 2 quarters. So they're headed in the right direction. They need a higher silver price because their costs are a little bit higher than the average silver producer. So let's say their all-in sustaining cost is $23 to $24 an ounce. At 26 or 27, you're making money, and it's not hand over fist money. But once you get to 30 plus, this is the kind of stock that will have a ton of torque to the silver price. So we've been buying that on dips here. We continue to think places like Peru are much safer than they were under Castillo's reign. Castillo's been in jail for 17 months now. So, I mean, it's time to move on as an investor and look at Peru, I think, in a different way, meaning like it's a much safer place than it was under his reign. So Jose Garcia, who is the SilverX CEO, actually lives in Peru. The ticker is AGXPF, and we had dinner at PDAC, and he was saying, "Look, John, everything is in place for a rally here, not only in silver but in Peru." So that's the kind of stuff we like to hear from a small producer in Peru. So you kind of get the theme here, Charlotte. We're not going just for the big cap silver stuff. We're buying smaller cap silver producers that have a lot of torque to the silver price. And someone like Jose owns, over 10% of the company, right? He's got a ton of skin in the game. So it's, doesn't mean it's going to work, but it means that you have someone alongside you as an investor that really cares about the projects.
Yeah, certainly I can see the theme there. And all right, so gold and silver, definitely that's where a lot of the excitement is right now. But we've been talking literally for months about at this point about your energy transition metals event that was happening in Washington, D.C. And that actually just wrapped up. So I wanted to check in with you on key themes or highlights that you would want to share from that.
Well, it wasn't my event. Just to be clear, I was an advisor to the event. Misha and Jessica Leventhal put it on, and this is a mother-son duo that hosts Beaver Creek every year in Colorado, and they do other conferences as well in Zurich, Sydney, etc. But I thought they did a great job of hosting about 60 companies in the copper, uranium, lithium, space, if you will, the energy transition metal space, nickel. And it was an awesome conference. I mean, there were no bad moments in the entire 2 days. I mean, it just went very smoothly and quickly. And I was able to bring my daughter to that for her first conference at 11 years old. So we had an awesome time together. And she met a lot of my CEOs that I talk to regularly, as well as some of my clients. So it was a lot of fun. But I think it was a very positive event. One of the cool things was that CEOs were able to talk to their constituents in DC, around the conference. So I think people got a lot of that, a lot out of the trip in general. And the theme, coming out of that, Charlotte, is that the U.S. government is actually well aware that China is ahead in the commodities race, so to speak, in a lot of these commodities, and they have to do something differently. And that I heard from 3 different CEOs, independent of each other, that they had very positive meetings and were kind of surprised by the fact that individuals at the DoD, DOE, and other agencies were aware that, hey, we have to do something, and grant money isn't going to be handed out tomorrow or next month, but it's coming. And I think a lot of these companies are well positioned.
Okay, really interesting. And my apologies. I think we've talked about it so much that in my head I was like, yep, that's your conference. But of course, all the credit where it's due. So really good to hear that that was a success. And just on the note of energy transition metals, I was going to bring up copper. So, I've said the excitement was in gold and silver so far this year, but copper has been moving as well. So of course, wanted to check in with you on what's going on with copper and any copper holdings that you are watching at the moment.
So copper's around 451 a pound. When we last met, I think it was struggling with $4. I mean, it's been a pretty quick move, uh, and and to see it approaching 5, it hit 469 a few weeks ago, is very bullish. And the large cap copper names like Freeport, Arrow, all this stuff is already taken off. Not to say it won't go higher, but we're looking, below in cap again, like we do in gold, at some of the mid cap and small cap names, because a lot of those names haven't moved much yet. And so we want to get behind those projects now before they take off, because I think copper is going to have a good year this year and a great year next year. So we like, NevGold. That's a new name for us, NAUFF. I met with Brandon at that conference we just talked about 2 days ago for the first time. And his dad was chairman of Copper Bank, which is now Faraday, when I was investing heavily in that company, and still owns some CPPKF. But in looking at their news flow in April, it got me really interested, because they have a copper project called Zeus, which is 20 kilometers away from Hercules. And as you know, Hercules is getting a ton of news, especially last year, about what they're doing in Idaho. So, yes, it's a proximity play, but I think it's a little more than that when you look at the news flow. So, I think Brandon is excited about getting more news to the market this year, and they did a raise probably about 4 months ago, so they're not in need of immediate cash, which I also like. So I've been investing in that, and on the copper side as well, I would say take a look at Vortex metals, VMSSF. I know I mentioned that one other time on your show, and Michael Williams, who founded Aftermath Silver, co-founded this company. So one of the things I like to do is go with someone who has helped me in one investment to their next investment. And so Michael and Vikas Ranjan, co-run this project. They have two deposits in Mexico, which are getting zero love from the market right now because, of course, we've got the Mexican elections coming up early June. So that will be interesting to see how that development plays out. I'm sure it's going to be bullish for a lot of Mexican copper, silver, gold stocks if we get an outcome there that's positive for miners. But they pivoted in November, Charlotte, to Chile, which I thought was really interesting because a lot of people are just holding on to their Mexican assets and kind of just waiting and seeing. They actually did something about it and picked up some ground right next to a producing mine in Chile from a local family. So there's no overhang from First Nations, from any other people. This is not right near a big populated area. And I talked to their geo, John Larson, gosh, I guess about a month and a half ago. And he walked me through their deck for about 40 minutes. And I think they're just going to do really well in their first drill program. So I've been buying that stock in advance of them drilling. They just got cashed up here literally like a week ago. And the ticker is VMSSF.
Okay, really good updates on copper. And before I let you go, last but not least, we should take a look at what's going on in uranium. And my apologies to our audience. I know this is a sector that I've been neglecting in favor of gold and silver. So if you can highlight what you see going on there, that would be great.
Well, if you look at January's price action, it was very bullish. Broke $100. I think it got to about 109, 110, if I'm not mistaken, on spot. And that got the attention of a lot of investors, really, even last fall as the ascent to 100 plus was happening. You saw Fission, Uranium Royalty, a bunch of companies cash up in Q4 of last year, leading into that rally, which was super smart because their stocks recovered very quickly and they were able to raise a lot of cash on the back of that. We're still seeing the junior market underperform the large cap stuff, meaning like the Camecos of the world. So we're very interested in uranium juniors right now. Two that come to mind would be F3 uranium. That's FUUFF. They just did announce an offering here a few days ago to raise just over $7 million. And that would cash them up for quite some time. But they made a major discovery not long ago. The stock peaked out at 41 cents US. It's trading now at 0.266, which is, I think, the weekly low. So, there is support around 24, 25 US. We've got orders out there to try to buy at that level. And if we're not successful, we'll raise our bids. But, I think Dev and his team do a decent job there, and they're getting overlooked by the market. Another one is Standard Uranium. I just met with John Bay at the conference 2 days ago. That ticker is STTDF, and they too just announced a financing this week. So both are in the mode of cashing up. What does that mean for investors? Well, it means that companies that are explorers constantly need money, right? So when you can buy a stock that's slightly depressed because of that situation where they have to dilute existing shareholders a bit, it's a real positive, I think. And John has 11 projects, all in the Athabasca Basin. He's got a unique model in that he's not trying to drill like 11 projects by himself. He's got a lot of JV, joint venture partners on these projects if you go to their website and take a look. And that gives, Sean Hilliker, his geo, a lot of, as he puts it, shots on goal. Gives you a lot of chances to be successful. And I think that stock trading at 0.033 US right now is very undervalued. So those are two names there.
All right. Well, as usual, I think we've covered a lot of ground, but before I let you go, I'll put it back to you and ask you if you had any final thoughts that you would want to leave with investors right now.
Sure. Well, I did my first gold event last month, which was a webinar I did on different websites that I use on a daily basis. I was pretty heavy on technicals. So if people like technical support and resistance kind of coaching, I went through a number of different charts, probably 20 different charts on showing people via different stocks what I would look at as entry points and exit points. That's available on my website, feneckconsulting.com. If you go to the events tab, you can buy the replay. I'm doing a live event with Don Durrett, my buddy who is the founder of goldstockdata.com. And Don doesn't really do live webinars that much. I think it's a great opportunity for investors to check us both out at the same time. We see the world a bit differently, but we get along really well. We really want investors to learn from what we're doing, and we share a lot of our ideas. We don't try to hold a lot back. So that is going to be a cool event, and that's happening May 16th at 2 o'clock Pacific. It'll be 90 minutes. There'll be a live Q&A, and realizing that that's a little bit late for European investors, we're offering the same price if they were to buy it on the replay. So, it's going to be $110 to do the 90-minute webinar with Don and I. And that's on my website as well. In the top right corner, you can see gold and silver event. Just click there and register if you'd like.
Okay, very good. And if you get the link over to me, I'll put it in the video description so people could find it. Okay. Perfect. Okay, well, we'll leave it there for now. I'm sure we'll be checking in another couple of months or so, but really good to have you. Thank you so much.
Thanks a lot, Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is John Feneck. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.